We are. You take it,
hey.
sir.
Go on, Chris.
No, it's your show.
I was going to say, and just like that, we are back for the first call. Sunday, 4:55, ready for the market open. How are you, Chris? Give me a little update on your weekend. Did you survive the 100-point face ripper that we had on to the upside on Friday?
Not just surviving, thriving, Nick. We're doing well out here. No, good weekend. My neighbor's tree had fallen into my yard and house recently. He was kind enough to come out yesterday morning bright and early, help chainsaw it up and make a new pile of wood for me for the winter. So problem solved. Plus, it's just a beautiful weekend here. There was no humidity finally. I'm so tired of the north being like the south in the summer now. It sucks. So at least it was a dry heat this weekend. And my Mets won 2 out of 3, Nick. So I go into this week on feeling a little bit better about things.
See, I can't talk baseball when you got Caleb Williams, throwing touchdowns to Rome, Loveland looking awesome, the offensive line being nice and steady, pressuring Mahomes in the pocket. I mean, that's what I'm watching.
Apparently, producer Josh got the Chicago Bears backup quarterback autograph recently.
Yes, yeah. He thinks Bagent's going to be our starting quarterback middle of the year. I don't know if I go that far.
That's really depressing.
He could be trade bait. We'll see.
I wouldn't want to make a prediction that our backup quarterback, gosh, if Josh Fields. I mean, being a Jets fan is so depressing.
Yes, yeah. No, you get to have a taste of what we just went through for the last 3.5 years.
Well, in good honor of that, I named our tastylive fantasy football team Just End the Season because being a Jets fan is absolutely miserable.
There you go. I retired from that league, so maybe somebody else can win.
All right. Nick, we had a really good day on Friday, and it wasn't just the S&P or the NASDAQ. It was the Russell 2000 that led the way higher. Early indications here are for a print that's probably going to be 64.90 plus. We closed at 64.84 in the S&P 500 on Friday. Mm-hmm. After the initial rally, after 15 minutes, the first hour, things more or less settled out for the rest of the day, but the vol crush was here. Josh, if we want to go to the charts right now, we could take a look at what happened with the VIX into the close on Friday, and it effectively closed at the lows. Nick, that's got to be our North Star heading into this week, right? We have volatility basically wiping out whatever concerns there were that were building up through August.
Yeah, totally. And if you look at, and Mike and I were talking about it a little bit on Friday, if you look at the vol curve, so we've got volatility futures currently at 1705. The VIX itself, you talked about 14 and change. It's at the low of the year. If you look further out at V, X, Z going into the end of the year, you have about a 2-point contango baked into volatility. So there is a lot of vol compression that is baked into the curve here. And what it tells you is that all those vol products are going to start getting smashed, but it tells you that, there is not much volatility projected in the near term here. And so I think you're right. I mean, volatility getting smashed like this, I would think that this is just the start of a little bit more to the upside at the very least.
Nick, I think we got to stay with the small caps and the Russell because that performance on Friday was astounding, up over nearly 4%. I think it was 3.87% in total. Yeah. I couldn't help but notice, though, coming into this week, we're looking at a pretty big short position for the Russell that still needs to be resolved. The Z score, going back to the start of available data, is still minus 1.27. It's from minus 1.68 2 weeks earlier. That's to say that positioning in the Russell is so short, it's more than 1.2, we'll call it 1.27 standard deviations below its average level since the start of the data in the Russell series. This is a short squeeze that's playing out right now, I think. The vol compression, the extreme pitch higher right now, I don't know if this is something people should be standing in the way of. I know that there's a lot of gut reaction out there, fade it, but you're seeing a market that's unfolding in a very neat, aggressive manner.
Yeah, I usually have a couple things as my indicators for fading, and it's usually friends texting me, mother texting me, sister texting me. I have gotten none of that. I mean, obviously none of those people are really in tune with Jackson Hole or Jerome Powell or any of the happenings in the interest rate realm. That's not really how's it, like mortgage rates, maybe a little bit, but other than that, yeah, they don't really think about that. But nobody was emailing or calling or chatting me about some stock that they bought that was up 30% or whatever. So it seems like there's more left to go. I will say, and we were kind of chatting about it earlier in the waiting room here. The move in crypto on Friday was, you had really crypto and the Russell; those were kind of your blast off mode. And usually crypto, I look at over the weekend as kind of my proxy for markets, just to see like what that kind of risk appetite is. And we've had some choppiness in Bitcoin specifically, but a lot of the alts are kind of screaming higher. It's almost like not only in equity markets are the small craps moving, but also in the crypto space. That's so it kind of gives you, it feels like, as a contrarian indicator to my thought that we continue higher, is that, you're not seeing the big stuff move. It's really all the little stuff.
Yeah, I saw spot Bitcoin flash down to 110, and I went on to Reddit to see if there was any news out there. Someone on the Bitcoin forum asked, or Bitcoin subreddit, I should say, asked, why is this happening? And most of the responses were incredulous. Like, is this your first time around here, buddy?
Are you new here? Yeah, come on.
Like, yeah, you buy 120K and it drops immediately to 115. That is just par for the course if you're trading crypto. So get used to it. But yeah, I think that's a fair assessment, right? Like, why is crypto coming in so aggressively? I think we're going to have to take a look at what happens with the Asian and European traders here as they address this. I only mentioned that because it was a few weeks ago, right? I don't want to forget this here, but we go back to how the market reacted in the US after non-farm payrolls. And it was a bloodbath. Things got slammed. And then you go into the Asian hours and there's no more downside. First off, contextualize this. Why do we care about Asian and European traders? By the time the US day is done, those traders are not returning with their liquidity. It's weekend. Mm-hmm. So on the Monday open, what do we see? Asia's happy to buy the market. So's Europe. And we start reestablishing ourselves into the uptrend. So if there's no follow through to the upside tonight, or Asia, Europe comes in aggressively and sells this thing, Bitcoin's already down. Maybe it's a flag. It's a sign. But it just wasn't stocks, Nick. I mean, this was a huge day on Friday. Frank, our producer, sent over some stats for me to share with us here on the show, which I think is worthwhile because he does a great job when he's not making me feel like I've, never lived a life the way that he has. Friday's option volume of 78.2 million contracts was 33% above recent average levels, with calls leading puts 3-2. Among the 500 at most liquid single stocks, 30-day implied volatility was higher for 59, but lower for 391. That seems like a huge shift that's difficult to ignore when we think about how the market could unfold this week. Is this the capitulation of the summer bears throwing in the towel before we get to Labor Day?
I forgot we have Labor Day coming up too. So you got a holiday weekend, probably light volumes all week. You probably get, that typical like chop fest the first couple sessions, and then, you get a low liquidity bid on Friday where everybody's just buying into the weekend. You celebrate the holidays. Is that what you're telling me is happening here? Is that what's on the docket?
This is the week where people are gone, right? It's the final week of summer. Kids are back to school or getting ready to go back to school. This might be a really frustrating week for people who are looking for big moves because there's not a lot of catalysts, right? Yeah. Maybe you could look to the end of the week for PCE, perhaps Nvidia earnings.
Yeah, that's the biggest. I mean,
that's probably the biggest thing we're paying attention to on Wednesday, Nick. So let's just go right there before we bring Ilya on in 5 or 10 minutes. Through the end of the week, Nvidia is looking at a plus or minus 11.25 points. Do you think this is worth playing the weekly options here? It's an IB rank of 19.7. Is there a buy the dip opportunity that's already come and gone, perhaps, in the leader in this AI trend?
I will say, we talked about this a little bit too throughout last week. Nvidia was having some massive ranges throughout the week, and when you're talking about the biggest company in the world having 5-6% moves in both directions intraday, that's a pretty interesting sign. I mean, like it seems like, and obviously the stock has had a massive run to the upside, and I have leaned a little bit short here into earnings for the very simple fact of like, can you really play for, what are we sitting at right now? 4.3 trillion is what we have on the platform here. Can you play for a 4.5 trillion company here? Like have we got to the point where you take some profits off the table, you wrote it from 100 to 175? Like, is that kind of where we are in this stock specifically? I mean, like that's kind of what it's felt like to me. And when you look at SMH specifically as well, SMH, we're basically a skosh off highs. And some of the other stocks have been playing kind of catch up into the last week of volatility. If you look at AMD, it came down $15-20. You got some of the other stocks like Micron and AMAT had a huge move to the downside on earnings. So it seems like we've kind of priced Nvidia for perfection here. At least that's my opinion. And maybe we get like an inside move, right? A nothing burger. We've seen it a couple times on Nvidia earnings where, the stock reports great. They report great numbers and the stock is, unchanged or down. There's typically a little bit of a bid for it as anytime it goes down as just looking at the chart will tell you. But that's kind of how I'm playing for. I'm playing for a inside down move. I don't know what the numbers are going to be, if they'll be good, bad, or right at expectations, but I expect there to be a little bit of profit taking. That's how I'm playing it.
Nick, keeping that in mind here, you say you're looking for an inside down move. If we were to do a short iron condor trade 5 days out, looking at the short call spread side, that's bracketed inside the 1 standard deviation move through Friday, short the 187.5, long the wing at 190. And then on the other end, just going beyond the 1 standard deviation move, the 160 long for the wing, and then the short 162.5 for the gut. That gives you a 67% pop, right? Risking 1.5 to make one a little bit worse than that. We could pull this in to get slightly worse pop and maybe a better risk to reward. But I mean, there is something there to play with. And I think you make a really great point. I don't want to say Tom's not here. So nice name check of the fundamentals there. About this being a 4.3 trillion market cap company. How are we getting to 4.5? How are we getting to 5? What's the narrative that we're selling? What's the story that's being told? And
you don't have to be bullish or bearish. I'm not like sitting here like bearish on the company. It's just a really big number. 4.5 trillion is a really big number after, you rallied 2 trillion from the lows, 2.5 trillion. It's like, sometimes you get just a breather. I feel like that's kind of my thought process here.
Nick, let's make our way around the horn. You mentioned some of these other companies in the semiconductor space, but let's think about the Mag 7 here. I saw a report over the weekend with Friday's close. The S&P 493 has now outperformed the Mag 7 year to date.
Wow.
That's something that we obviously haven't considered, but you take a look at the equal weighted S&P 500 and RSP here, and it's surging up to new all-time highs, whereas the equivalent SPY, the market cap weighted S&P 500, is still just, as you used, great word, skosh below those all-time highs. Mm-hmm. Is this the broadening of the rally, right, that bears need to kind of like keep an eye on? What I mean is, don't ignore the road signs, the signposts here that there's some significant breakout in the sectors and the places that haven't been loved for a long time. And maybe that's the last final straw of the bull market, right? Maybe this is the capitulation. But
yeah,
I mean, how do you look at the rotation coming out of the end of last week? It feels good when I look at it across the board.
Oh, it's certainly bullish. I mean, it's certainly bullish to see the rest of the market kind of moving. I think the other story that you can tell here is that maybe there's still a catch-up trade in some of the Mag 7 stocks. We've talked about Google. Google has been one that I've been leaning long on for quite some time as kind of a catch-up trade. It's back to highs. The rest of the Mag 7s, which are, kind of dragging that group compared to equal weighted. You look at Apple. Apple is still, 10, 15% from all-time highs. You look at Tesla. Tesla's another one that's been, kind of dragging through the last 3 or 4 months. You've had about a 40, 50 point range here, very atypical of Tesla to not have like, a squeezy type move on a 100-point day in the E-minis. I mean, it did have a nice move to the upside, but it's still, near the lower end of where it's been trading. Another one that has kind of been left off the Mag 7 grouping, Netflix. Like Netflix hasn't really had any sort of up move in, the last month or two post earnings. It kind of got to highs and kind of has been dragging from there. And so I think that's the other story. Even like an Amazon, which has been very strong and has had better catalysts over the last week or two, is still 5, 6, 7% from all-time highs. And so I think the other story that you could tell with the catch-up trade that has happened with the equal weighted versus the Mag 7s is that there's still some really big, beautiful companies that might have some upside here to catch up.
Some big, beautiful companies with some catch-up. Yeah. All right, before we bring on Elliot, let's get off of stocks for a quick second, as Tom and I would do, and we head over to the bond market here. Bonds also had a really good day on Friday, and it's if we really thought that this was a bad decision by the Fed to signal that the September rate cut was coming, the bond market probably would have behaved differently. Mm-hmm. Here at the open, they're sticking around firm. ZB's up 4 ticks. ZN is up a handful. Well, flat now. Either way, though, vol here is coming in. So do you make a play directionally right now, given the low vol in bonds? Continue to look for sideways chop? What's your assessment?
I have not been trading bonds. They've kind of been secondary. But I mean, the rate cuts are now on the table. So bonds, got to be moving higher, you would think.
Bonds were up. The dollar was crushed. And I think that's probably as good of a point as any to bring Elliot in for the second half of the show. I know he wants to talk the US dollar.
Yeah.
Josh, bring him in. Let's get him in here.
Crushed,
there he is. Don't growl. The resident bear's here.
the little currency that could on Friday, the US dollar.
Take your case.
I mean, I don't know if I'd call that a crushing. I mean, take a look at the architecture of this bottoming since the beginning of July. And actually, one of the most interesting things to me, given sort of how violently stocks reacted, is how well the dollar held up. This isn't, in my mind, the thing that you would be expecting to see if the market had become meaningfully dovish relative to what sort of the Fed did. If the Fed had come out more dovish than the markets expected, this is not what you'd see. You'd probably see the dollar get shellacked much harder and not keep the architecture of this begrudging but nevertheless a bottoming against all of the major currencies. And you see it across the board. You see it in the Aussie, you see it in the pound, you see it in the Canadian dollar, yen, pick your poison. And what's interesting in that context is the S&P doesn't break its high. The NASDAQ doesn't even make a run at it. And so violent moves, yes. But what have they accomplished? They have erased the period of concern between the August 12th CPI report, which was exuberantly greeted by markets, and this thing that we just heard from Powell. So if the markets were a little bit uneasy about maybe Powell was going to rug pull the September cut that everybody, by the way, had fully baked after the CPI report and only took it down to maybe a chance of 73% at the lowest, this thing had better than even odds the entire time. What they got, it seems like, was confirmation of something they already knew. But la-di-da, relief.
Mm-hmm. He's a legendary hater.
Which part of what has happened is the catalyst for the next thing? And so I'm watching the price action here closely. We've had the open. It's not exactly exuberant. It's not anything. It's
nothing.
pretty quiet here. So we'll see, I think, a lot more as liquidity from Asia, and even more importantly, because Asia is not the deepest market, from Europe. Once you start to get that overlap between Europe and Asia, you start to see London come online with some meatier liquidity. It'll be really interesting to see how this sets up then ahead of the Wall Street open. Because if there's not follow through, as you were saying, overnight, this could be, okay, that was the confirmation that we needed. That was the crescendo of the story. Now what? And then it's a buy the rumor, sell the fact kind of a thing.
Nick, I deal with him every day. Do you want to address that first?
No. Hey, listen, we've seen, we've had a lot of reversals specifically after Powell speaks. We've had like that 48-hour rule of when, that kind of is the time where the trend, the move kind of gives up a little bit of it. I mean, from a trader's perspective, I would welcome some downside, pop in volatility, give me a little bit more of an opportunity. But I think the fire hose is open. The rates are coming down, liquidity's coming in. The government's buying 10% of companies. I mean, it's flowing.
I'm old enough to remember when.
That's the biggest question for me.
I'm old enough to remember when government getting involved with grocery stores was a no-no, but apparently buying Intel's fine.
Right. Also, is it buying? Are we buying Intel?
Gifting, whatever. We got so much. Companies are so big now. We can gift it. We gift it to the U.S. government.
I keep hearing somebody say, "Hey, just let me wet my beak a little here. Come on now."
Yeah.
But the notion that we have liquidity coming in, obviously, yes, of course. But did we know that already? And I think the answer is obviously yes. The probability that we're going to get a September rate cut has been on the board here for months. The Fed has been saying since December that they want to do 50 basis points this year. That hasn't changed. They've only tinkered with next year's outlook, and the market thinks that they're wrong there. So there's still a disconnect. Market is pricing in 3 cuts next year. The Fed is pricing in, or not pricing in, but forecasting loosely, as they like to say, 1. That's the consensus on the committee, or the median of the projections. So there's some disconnect there, but the Fed has been absolutely consistent about this year, 50 basis points. They've said it before the election and the new administration came on, before we knew what the tariffs looked like. That hasn't changed, and the calendar is running out here. They have 3 meetings. If they're going to do 50 basis points, they got to do them. So, yes, there's liquidity coming. This should have been in the market ages ago. So, okay, we got confirmation now. It's a done deal. Cool.
Nick, you know why I don't like what he says?
Legs beyond a day.
I don't like what he says because he sounds like Jiminy Cricket in my head. It's like that like trading this long is a very stupid thing to do, and it's like, yes, but being stupid's worked so well for so long.
Well, you brought up the tariff situation. I almost forgot that we still have China tariff news.
That's right.
To give us that.
Don't even do it.
Wait, aren't we in another 90 day?
We're going to keep going 90. That's the whole thing.
Exactly.
Is like the next 90-day move.
There's always
another 1% to the upside.
How many 90-day pauses? How many 90-day pauses are in a presidency? 6 per year. So we're probably 20. We still have 21 90-day pauses left, give or take.
Yeah, but do we care? Does the market at this point expect for there ever not to be a 90-day pause?
Yeah, but I think another bullish thing, right? And we talked about it with Dylan on Hear Me Out, and it was like, I think the market has discounted the Trump wild card now.
Right.
That used to be what I would hold my hat on.
Yes.
The weekend is kind of scary. He could announce buying a public company, and that's like a catalyst for downside. But nobody cares anymore. It's just it doesn't matter.
I think you're absolutely right. And that's why I think the 90-day reset is less of a thing until shown otherwise. because I think everybody's kind of assuming, like, listen, if we ever got to a point where the markets got yippy again, there would be a quick reversal, and so let's just bake that in off top.
Okay, but that's a really important point, and I don't want to skate past it. I want to just give you credit for the whole. If today's going to be a soft day, just keeping in mind, we not only have Bitcoin and Ethereum down, two of the big winners on Friday, gold, but more importantly, silver is likewise a little bit soft here at the open, down by 0.44%. Again, it's a thin market. Silver futures at this time of the trading week, there's no trading volume at all. But just directionally,
now.
The US dollar's up versus the euro, the yen, the pound, silver, gold are off. Stocks are softer marginally here at the open.
Let's just give it time. There's nobody out here at this point.
But I think that's the more important takeaway from Friday, right? It's like this, there's a risk, and you just mentioned this about Trump. The market has this idea, this faith in this malleability of the Trump administration, with the very specific notion that when things get bad, they're going to pivot.
Yes.
Okay. At least when it comes to the market.
Yes. It doesn't seem like they have an ideological perspective. It seems like they have an idea of what they want to do, and then
do have an ideological perspective. They told us a few weeks ago when they granted AMD and Nvidia access to China for 15% of their sales there. That was the tell, that they care more about American corporate market access and the bottom line. And Trump much prefers going out there quoting the Dow Jones and the S&P than he does saying things like it's Main Street's turn over Wall Street's turn, which I can't believe Besson and Co. were saying all that stuff a few months ago. And now you see what they're saying now. It's like, do you guys remember?
That's what I'm saying. It's not an ideological perspective. It's what seems to need to work at the moment.
But there's a certain currency that carries in the market, right? Like, oh, if things hit the fan, they're going to adjust and not let things hit the fan for too long.
Yes.
Okay, but the Fed likewise has that credibility after Friday, because Powell pays lip service to, the labor market's more of an issue than I think people are giving it credit for.
Yeah.
And if you think about the evolution of the labor market, just Trump's immigration policies included, it probably takes the run rate of what the break even of jobs growth is in the economy down from 112,000 at the start of the year to maybe something like 70K, 60K. So the rate's really the important level, and the employment rate's still at 4.2%, but claims are going up and yada, yada, yada. So there's optionality there, right? You get a really weak jobs report, the Fed's going in September. If it's hot inflation, hot jobs, they kick the can to October, but the cuts are still going to be coming.
Yeah, no, I think the 50 basis points for this year are at this point such a given that it's just a matter of sequencing. And the real object of speculation is where you see the disconnect, where what's going to be really interesting about September isn't whether they hike or cut or do anything, because it's kind of a given. This cut is coming. They've gotten themselves into that conversation. Their credibility is there. They felt good enough for Powell to come out and stake it. They've said it since December. The market's had it priced in for 6 months. It's coming. I think the larger issue is, what does that SCP say? Because there you have a significant disconnect. The Fed wrote down one rate cut for 2026 when they last updated this thing in June. The market told them, you're hilarious and way off. It's going to be at least 2, and we'll see if we decide to price in a third. And they've been kind of oscillating between 50 and 70% odds of a third. So they clearly think that inflation is not the issue, but whatever disinflation comes from the tariffs hurting the economy and crimping consumption, that's the dominant force. And the break-evens in the bond market have said this for months. They're not baking in an inflationary spike. They're saying whatever the growth impact is will subsume all of that. So if you don't see the Fed go the market's way and give you a dovish forecast beyond these 50 basis points that we should all know about now, that's the bigger deal.
Well, that's a lifetime away, Elia. It's only August 24th. Fed meeting's on September 17th.
Right, but if everything is so priced in, and now as of Friday, speculation has become reality, sentiment has to default to something. What is it going to default to? After the CPI report that everybody liked, the market could not buy itself an uptick. Why? because everybody went, not let's go fight the war that we just got on this CPI number. It was good for a day, and then everything faded and we lost the breakout because the market went directly to, okay, what's next? So good, we just confirmed a thing that was priced in. Okay, what's next?
Could I ask you a question? On Friday, did inflation break-evens explode higher, or did they stay relatively constrained with the market reaction to non-farm payrolls?
Relatively constrained.
I think that might be the tell.
That's the thing. That's the thing. They did not take this as dovish. They took it as confirmation of something they already knew. They took it as removing of uncertainty risk.
But it's better than inflation expectations in the market shooting up.
Of course.
If what the Fed was signaling was problematic for their ability to fight inflation, those inflation expectations would have rocketed up. And that would have been the bigger problem for me.
And that's the thing. That's why I don't think what happened on Friday was so much a trend change as it was removing of event risk out of the way of whatever sentiment wants to do now. Because if your question was, will the Fed rug pull September? I think you have your answer. And the answer is no.
All right, Nick,
now
we got a few
the real
minutes.
question is what happens next?
Well, what happens next is that we need to think about what we're going to do at the start of this week. Nick, Nvidia, I'm assuming, is your most important event on the calendar this week. Yeah. Earnings, macro, right? You may hear from some of these Fed speakers, but who knows if they actually matter. And how are you thinking about Nvidia? You said inside move, slightly lower.
Inside down is my play. I mean, I just think
how would you structure that trade?
So I've been playing it with diagonal spreads, like put diagonal spreads is really what I've been trading here. So buying somewhere in October, around the 40-ish delta, let's call it like the 175 puts. And you could sell either the September, if you want a little bit more wiggle room, somewhere around a 20 delta, like the 160 puts, you put up a couple, $600-700. If you go out to the weekly, you probably have to move that a little bit closer. You can do it somewhere around like the 165, and you do that. You have a 10-point wide. It's a dynamic delta position. It gives you a little bit of positive gamma. You expect to see volatility expand. If we do get a little bit of a downside move in any fashion in Nvidia, you would expect volatility to expand. And so that's kind of how I'm playing it here, of like just a downside play in Nvidia. But I think if the market moves lower, it has to be on this Nvidia earnings. That's a catalyst.
There's not much macro until you get into the PCE report on Friday. So it'll be Nvidia, and it'll be 2 days of figuring out whatever the default is after what Powell said. So I suppose the markets have basically a 48-hour window, as you were saying, Nick, to kind of digest and figure out what they want to do with this thing, just risk on, risk off wise.
For me, the most attractive trade on the board the next week is going to be oil. It's roll week for me. I have 24 DTE in the CLV5 contract. Going out to CLX5 at the October 16th expiry, thinking about a market that might be tilted lower, Ilya, because of the growth concerns. Yeah. And whatever's happening in the Middle East or Russia, directionally, it seems like we're coming in. There's still a 60% pop, risking less than three to make one. I think that's attractive. I'm not going to be doing much this week because technically I'm on vacation. You didn't see me here tonight, folks. But the reality is that if I'm going to be putting on any position that I'm comfortable with having on and riding while I'm not going to be actively paying attention to markets, it's going to be the one that has just worked so consistently. And certainly while bonds and notes have been good directionally neutral, they don't have much vol, relatively speaking. IVRs are back below 10. But oil is back at its midpoint of where it's been since this post-Liberation Day, post-Israel-Iran war. That midpoint is basically 63.75 in CLX5.
Yep.
And, right now it's a market that I think continues to have reason to grind sideways. So, Nick, you have your Nvidia trade. Ilya, you're looking out at the currencies in the later half of the week. I'm here thinking directionally neutral oil. But you know what, guys? We told Josh we'd be sticking to a 5:30 finish flat, and that's exactly what we just crossed here. So it's 5:30 Central in New York, 6:30 Eastern, and wherever Ilya is, I think that's still San Francisco.
3:30 in the PM here on the West Coast.
As it were, stocks here going into the end of this first call, a little bit lower. S&P up by 0.06, NASDAQ down by 0.09. Nick, programming resumes 2:30 Eastern, 1:30 Central time overnight in London. And then, of course, we have not first call, but we will have the morning show.
Yes.
Normal time.
The bats are taking over Monday, Tuesday. Tom is still gallivanting with all the billionaires out in Mexico. So, the ragtag crew is taking over the morning show tomorrow. So come join us then.
8 Eastern, 7 Central, every Monday through Friday here on tastylive.com. But until then, good luck trading tonight. We'll see you tomorrow morning. For Nick, for Ilya, I've been Chris. Have a good evening.
Good morning and happy Friday, trader friends. We are here on Trade Live with IG with the indelible Chris Beecham. Morning, Chris.
Good morning. Is that even the right word for a Friday morning? I don't know. Indelible.
Well, it's dry. We've got another day of beautiful sunshine, I believe so, coming up.
A bit nicer, than yesterday. A bit nicer than it was yesterday.
Yeah. Although we did have quite a nice, afternoon, evening sort of sunshine, warmth come through. But it's still relatively good for end of August.
Yeah, well, it was dark when I got up and went to work yesterday morning, so it's that kind of